SoFi stock, SoFi Technologies, second quarter 2024 earnings beats expectations. Let's talk about SoFi. I love SoFi, especially under $7. I believe under $7 is a buy because Anthony Noto, the CEO, loves to buy the dip around that area. And it's held that zone for a while now. Now let's talk about the second quarter 2024 results. Revenue up 21% from Q2 2023, 587 million. Net income up from 57.6 million loss in 2Q 2023, and a profit margin of 1.4%. Now let's continue down here. Looking ahead, revenue is forecast to grow 14% on average during the next 3 years, compared to a 12% growth forecast for the consumer finance industry in the US. So far, at least for SoFi stock, we are looking at a stock that, if we go to the TradingView financials, there we go. Let's look at the TradingView financials real quick. But at least on the financials, if we go to their statements, and you guys know me, I love stocks that continue to grow quarter over quarter, year over year. As you can see, since 2019, because that's as far as this goes back, they've grown from 721.02 million to 2.91 billion as of 2023. Their total operating expenses are they're pretty high. Their operating expenses here, 2.18 billion, which is that's more than half of their total revenue. Now I wonder what their cost of goods sold is. Their cost of goods sold? They removed the cost of goods sold? Why is there no cost of goods sold here? Unless it got lumped in with the total operating expenses. Didn't there used to be a cost of goods sold? There's the cost of goods sold. Okay, that's what I wanted to do. The cost of goods sold apparently was moved, but the cost of goods sold has stayed in the 360, 390 million range for now. We'll see. I'm going to assume that continues to increase as we grow more and more profitable. But why are there? Yeah, their expenses are just exorbitant. Their selling general admin expenses are at 423 million. I would like to see in the future. I would love to see their their expenses go down and their cost of goods sold go down as well, or at least their revenue go up enough that that the total operating expenses isn't eating more than half of the total revenue, because it's eating into the profits quite a bit. So that's the only thing to keep an eye on. It's not concerning by any stretch of the imagination. It's just that is a very high total operating expenses. Look at that, 860 million Q2 2024, 815 million. 908 million Q1 2024, 762 million in total operating expenses. So total operating expenses have always been high enough that hmm. Well, let's just hope their total operating expenses doesn't exceed their total revenue. Then it would be time to get concerned. Other than that, looks fine to me. Operating income 45 million, pre-tax income. What's their net income? 17.4 million, which was a decrease from previous years. A decrease from previous years, by the way. Yeah, it was a decrease because they made less compared to the previous quarter. Now let's look at the balance sheet. Again, it's a great company. I've seen the CEO buy the dip on his own stock multiple times now. And when he does that, I usually jump in with him. But right now, we might be entering a bear. We might be in a bear market. Who knows? We'll see. If the market recovers in the coming week, or as if you're watching this video, you're probably watching it during the week. If the market is recovering, we'll see this go back to $7 plus. What about assets? Their assets have been increasing quarter over quarter. Liabilities, yeah, slow increasing liabilities quarter over quarter. Where is total equity? Well, You're not going to see much money if they decide to liquidate everything. But net property, where's receivables? Receivables at 66 million. What are their payables? They have long-term debt of 3 billion, which has been decreasing actually because it went from 5 to 5.77, 6.12, down to 1, down to 5.88, down to 5.34, and now at 3 billion. So they've been paying off long-term debt. Let's see. Short-term debt. Apparently, it shows no short-term debt. That's interesting. They've had no short-term debt for the past two, since the start of this year, for the past 2 quarters. But are there no payables here? Am I deferred income, deferred tax, provision for risk and charge, total not other non-current liabilities, non-current 528. That's been kind of going flat for the past couple of years. But technically, it's decreased from 625 million to 528 million. That's nice to see. It's always nice to see their liabilities go down as their assets increase and revenue increases. I think there was an update to TradingView because I swear it used to show more numbers here. There's the shareholders' equity. Yeah, we already knew 5.9 billion. Yeah, there used to be book value down here as well. Net debt. Net debt nowhere to be found. What about cash flow? Free cash flow negative 41.75 million. So their net cash. What's been going on with that? I would have to do more research and go a little deeper as to why their net cash is in the negatives for these past 2 quarters. Anyways, on the technicals, anytime this one comes down as cheap as $6.50 and under, it is a buy. You can see very clearly 1, 2, 3 every time it's come down here. Even way back here, we had it come down to $6.50 and under, and it's a buy. So the cheapest this has come down to is $4.80, $4.50 during that bear market where everything got real cheap. So if we do go into a bear market, watch out for $4. Yeah, watch out for $4 to $5 for an accumulation because you want to accumulate it during a bear market. But if we're just gonna bounce off of this level here, we'll see it back to $7. As for all intents and purposes, we're in a trading range between $6.12 and $7.94. So if we round it, we're in a trading range between $6 and $8 is really what it comes down to. So if you buy at 6 and you sell at 8, you're making $2 per share. That's some significant gains. Even if you just buy at 7 and sell at 8, I mean that's still a dollar. Anyways, that's my opinion. Don't forget to like and subscribe if you want to see more for Sofi Technologies videos, and I will see you guys in the next one.